Good afternoon, everyone. Welcome to another edition of the Raintree series of client presentations. My name is Adam Durgis. I'm one of the founding partners with a firm we're a national firm based out of Edmonton called Raintree Financial. And I'm here today with Amy Kramer of the Durum team. Durum has a couple of different investments on our shelf, and you're going to learn about one of them today called Bow, Water, and Land. For those of you who have maybe had experiences with land investments in the past, I can tell you that this is quite a bit different from most other land investments that you see, because there is a water component to the investment that really requires a little bit of understanding, and it just takes a little bit of time to kind of wrap your head around why it's so important. But I'm really glad that you chose to spend a little bit of your time with us today. So Amy can tell you all about this wonderful strategy. So Amy, how are you today? Having a good day?
I am, yeah. Thanks so much, Adam, for having us on the call again today. I know it was great to be on your weekly call last week, presenting Durum Industrial. But today we're talking about our growth strategy. So happy to be presenting Bow, Water, and Land.
There you go. That's great. So Amy, I'm going to turn my camera off just to save a little bit of bandwidth. You can leave yours on or whatever you prefer. It doesn't really matter. I'm going to stop my video and we'll turn it over. And of course, I'll interrupt you if any questions come up that I feel needs to be addressed on the spot. So over to you.
Sounds great. Thank you so much, Adam. And as Adam alluded to, we are talking about a land development project. And I know a lot of investors are familiar with land development. But we lead off with saying that we're not just another land development project. And there's a few reasons for that. And that's really what we wanted to focus today's call on, is talking about what makes Bow, Water, and Land a little bit different, and how does it fit within our overall investment strategy. So just before we hop into that, as always, a bit of a general disclaimer. Of course, there is no guaranteed returns. We will talk a little bit about forward-looking information and target returns, but there are still risks of the investment. This is not an offer or solicitation of any kind, and please do talk to your authorized dealing representative should you have additional questions. So with that, we will jump in and just provide a brief overview for starters of what it is we're talking about when we're talking about this land development project plan. And the first piece is really around location. So for anybody on the call today who's familiar with Calgary and is driven to Banff National Park on the Trans-Canada Highway, you would have passed the nearly 300 acres of land that we're talking about today. It's that location there highlighted in blue, just to the west of Callaway Park. It's 1.6 kilometers highway frontage, just 6 kilometers west of the Calgary city limits. And one of the components that makes this project truly unique is this water license component. So we will talk a little bit about why water is so important and why this figure is significant, but we do have over 7 times more water than what would be required to service the lands. So that provides for a unique opportunity for investors in the project itself. And I see Davin's there on the call, just connecting to the audio as well. I'll continue to run through. Davin, can you hear us?
I can hear you, but I'm having some trouble.
All good. I will.
Okay, yeah, I can hear you better now. My headset.
All good. So Davin, we were just running through a little bit about Bow, Water, and Land, but before I continue through talking about the land itself, just a quick introduction to Davin here on the call. Davin is one of our managing directors at Durum Capital Inc., and he really is the project lead for Bow, Water, and Land. So he's been involved in the project since before we syndicated. So in 2014, I think he was brought on into the project, and we syndicated in 2015. He's really known as the water guy, and I'll leave some of the water questions to him, but he really is involved in all aspects of the project. So a great one to have on the call today. Even though we may be interrupting his vacation, very happy to have him here joining us on the webinar.
Yeah, somebody commented earlier in the day that this looks like a Zoom background, but it's the real deal. I'm on a family holiday, but was super keen to join and talk on this call.
Perfect. So we were just touching on the location of the lands and a brief overview of having a little bit of excess water, well, quite a bit of excess water, more than required to service the lands. And then also just in terms of the project overview, we are looking to target a 10% return to investors per annum, plus a 55% profit split. So looking at a total target return through this growth strategy of 15 to 20%. So that's the high-level overview of where the lands are and where it's located and a few of the uniques around the land. But we'll dive into a little bit of what we're actually trying to accomplish with the land development project plan. And essentially, put simply, it's really preparing the lands for ultimate sale at shovel ready. And what that means is looking after the initial servicing before ever putting a shovel in the ground and actually building the construction. So it means taking care of water access and treatment, wastewater treatment and disposal, road access, as well as land use designation and subdivision. So just to provide a brief history on the project, we did originally syndicate the project in 2015 with this land development project plan really laid out and a few key risks that were associated with the project back in 2015. One of the biggest risks was access to water. So why this is so important is that any land development project in Alberta requires access to water in order to be developed. And you can't just get water from anywhere. In 2007, the Alberta government actually put a moratorium on the issuance of new water licenses. And what that did through that regulation is it really created a supply and demand function for water, meaning that the only way that you could actually access water for development is to purchase it from somebody who has it. So again, required to purchase this water and it's a limited supply, that's what really creates a unique market that we only really see in Alberta. And so having access to more water than required really provides an opportunity from the investment side. So back in 2015, we had identified this water license, but hadn't yet acquired it. Fast forward to today, that's one of the areas that we will touch on in terms of risk mitigation and where the project is. As far as other elements, we will touch on road access as well and land use designation and subdivision. We talk a lot about what's known as an area structure plan and the key risks that have been mitigated along with the area structure plan to date. There are still risks associated with the project, but we'll really provide an update on where we're at today. So the first is in relation to that water transfer, and this was a big milestone that was achieved in February of this year. So it did take a lot of years to really have this water transfer completed, but some reasons why it's so important. So what I really mean when I say this water transfer has been completed is that we now own the water. The water is associated with the lands that we do own, so it makes that land itself developable. Why it matters from an investor perspective is it increases the value of your lands once you have access to water. The second key piece is when we talk about opportunity to realize on the water value. So when we say we have 7.7 times more water than what's required to service the lands, it means that there's opportunity to benefit from that excess water. There is a high degree of demand for that additional water. If you watch the preview Q&A with Davin and Peter Kincaid, he did get into some of those details around that opportunity and the demand for water in the area. And so now that we own the water ourselves, it does provide that opportunity to realize on that monetary water value. And the third key piece of why it really matters is when we talk about attractiveness of the land to an end developer. So we're looking at potential sale opportunities for the land and exits for investors. And now that we own the water, it really allows us to progress those conversations and increase the value of that land in talking about that exit opportunity. Davin, do you have anything to add on the waterfront before we move on to road access and land use?
Yeah, just for those of you who've been a part of the project for a while, you know, you were patient while we worked to get the water transfer finalized. And I look at that as a double-edged sword. What it speaks to, I think, is how challenging it is to actually secure that right. It's I guess ironically an illiquid market. It's a process where you have to buy an existing water license, and then you have to go through a public and environmental review process in order to make the transfer happen. And so that's why it takes so long. But it's also why it is such a great asset once you own it, because anyone else starting land development now outside of a municipality where there's a plug and play water system would start where we started 3, 4, 5 years ago. And so owning that strategic asset in this corridor where development's happening gives us an advantage for our own land, but it also gives us that card that we can win friends and influence people with by having the ability to connect others to that water supply. So it's a really brilliant asset, and it's as Amy said, it's peculiar to Alberta. We're one of the more arid provinces, or most arid provinces in the country, and the only one that has a market for water licenses.
Perfect. So then that brings us to the second component when we look at land use and what can actually be developed eventually on the property itself. And so if you have been following the project for a number of years, one of the risks when we initially syndicated was this area structure plan. And we looked a lot at an area structure plan boundary and noted that half of our lands were included within an existing area structure plan and half of the lands were outside of that boundary. Similarly, half of the lands were designated as residential use and half of the lands were still designated as agricultural use. So this was a risk of the project when we initially started. Fast forward to where we're at today, the county itself has been undertaking a review of the area structure plan with the intent to provide a new and revised area structure plan in the fall of 2020. So there is a draft plan that's currently being reviewed by council. As far as the Rocky View website, it is actually going in front of council at the end of July. And a few pieces of that draft plan that are significant. The boundary includes all of the Bowater and land lands, so includes all 298 acres in that area structure plan boundary, and designates it as potential highway commercial. So these are two key factors that we were pushing for in our discussions with the county and with other neighboring landowners, what we believed to be the highest and best use on the property. And of course, there's no guarantee that this is what the final draft plan will look like, but definitely a step in the right direction as far as risk mitigation and value add for the property itself. Taking that a step further, when we look at road access and road access solutions, this was an area where we identified as a value add piece as well in ensuring that there's appropriate road access for the lands. And there's three things really that have happened in relation to road access that have benefited the project and we foresee continuing to benefit the project. And the first is in relation to additional development in the area. So if you see the red dot on your screen there, what that's representing is at Range Road 33 and the Trans-Canada Highway, there's planned upgrades to that intersection. And those planned upgrades were really triggered by a few other developments in the area, being Bingham Crossing and the Harmony development. Why that is significant for this project is it essentially triggered upgrades to the yellow dot on your screen, which is Township Road 245. And why that is, if you're familiar with the area, is the planned upgrades to Range Road 33 actually cut into some of the parking lot for Callaway Park, which means that Callaway Park needed an alternate entrance, and that's what triggered this upgrade to Township Road 245 on the south side of Callaway Park. Again, why is that significant for the project? Is it provides a potential access point from the southeast corner of the Bowlands. So taking this a step further, we knew that that's likely not the best access point that we could go after. So we started discussions with additional neighboring landowners, as well as additional developers, including Harmony Development and Transportation Canada. And when I say we, I mostly mean Davin undertook a lot of these efforts and having these conversations. And that progressed further to a proposed all-terms interchange that's represented by the green dot there on your screen. So again, why is that significant? Is these conversations have really progressed forward within the draft area structure plan being reviewed by the county. Something very similar to this is actually in that proposed plan. Conversations with Alberta Transportation have been positive, and it really means that this 300 acres of land, we would expect it or anticipate that there's potential to be sandwiched between two all-turns interchanges on the Trans-Canada Highway en route to Banff National Park, in a very busy location with 25,000 cars passing on a daily basis. So a lot of key indicators to support this type of road access solution.
As you can see, you know, there's a lot of other development happening in the area. Amy may talk a little bit about the Nordic Spa that's planned for Harmony. Harmony, of course, is a community, a new community that'll have up to 10,000 people at build out. So there's a lot of pressure on the existing road network, and so the changes in growth are absolutely necessary, irrespective of our aspirations. We've had opportunity as a stakeholder to help steer those conversations, and of course, once we were assured that the county was supportive of highway commercial as a future designation for our land and for that corridor, with what we call Callaway Park a sort of a shadow anchor, because it does draw a lot of traffic to the area as well. It makes natural sense to have, you want to have interchanges at both edges of that development corridor. And we actually benefited, you guys have probably heard in the news about flood mitigation efforts in and around Calgary. And there's a Springbank dry dam. It was sort of a contentious project for a long time, but what it does is it actually interferes with the historically planned north-south main that was going to go into the west of our land, and that created the opportunity to work with Alberta Transportation in the county to move it in closer, which enhances the value of the land. Of course, everybody can understand why you see something from the highway and having an easy exit before the signs and after makes the value greater.
Perfect. So yes, you alluded to Davin, the Nordic Spa, and that's where we get into some of the in the news components of the presentation. So looking at the area itself and some of the drivers of development directly in the area. And the announcement back in February of the Nordic Spa coming to Harmony Development is one of those things that we paid close attention to in looking at how is this going to drive traffic in the area. Again, act as kind of a shadow anchor, to use the terminology that Davin referenced. And that really does, we anticipate this will drive a lot of tourism as well as economic stimulation in the direct area. So a great news story there in reference to Nordic Spa coming to the Harmony development. Another key piece that we look at is in relation to residential growth. So looking at population growth and what other items are being approved in the area. Again, an article from February of this past year, but also goes to show additional development and additional residential lots being approved within the immediate area. Of course, as your population grows and that residential development does get approved, it supports the need for future commercial development. So something like River Edge in the south side of the lands, it's approved for 49 residential lots, again goes to support additional development in the area. Another one, don't have up here, but that is significant, is the approval of Pradera for, I believe it was 56 residential lots. So development being approved in the area does go to show the growth component of the Springbank area, just 6 kilometers outside of the city of Calgary.
And just a little bit further to that, these approvals aren't entirely by chance. Both Pradera and the River's Edge projects would not have been approved without an agreement in principle with us to provide a portion of the water. So that is illustrative of the kind of power that gives us to support what we think of as symbiotic development. A little more residential in the area really improves the value proposition for the kind of commercial that we think is the highest and best use of our property. And we really have the ability to shape development in this corridor in a way that we wouldn't if we didn't have that water asset.
Perfect. And then one other piece that is significant here from June of 2020, for those golfers that may be on the call, the Phil Mickelson Golf Course in the Harmony development is also now open. So again, drivers of that tourism industry, as well as economic development and stimulation in the direct area. Great to see this golf course being opened up. So now bringing this back to the investment summary and how to participate, we are offering investor units at $15 per investor unit. As noted previously, the target return is 10% per annum, with a total target return of 15 to 20%, which would be inclusive of that 55% profit split potential to investors. We are raising a maximum of $25 million, of which $19 million has been raised to date. Minimum subscription currently is 10,000 in investor units, 6,000 if you are investing through a TFSA. Lesser amounts will be approved upon review. If that is suitable for you, we do encourage you to speak with your authorized dealing representative, and we will review that if it is a lesser amount from this minimum subscription. It is eligible for all exempt plans, and there are redemption restrictions that we encourage you to review with your authorized dealing representative. Of note, full redemption is available after 4 years, and quarterly redemption limit of $50,000. As far as a risk summary, as we have discussed on this call, a lot of risk has been mitigated throughout the project. It has been underway for nearly 5 years, and a few years even before that, before we syndicated the project. If you are familiar with land development, you know that time horizon is one of the risks of a land development project plan. We do anticipate an exit within approximately 3 years. However, of course, that can't be guaranteed. There are still some milestones that need to be achieved on the project. But you can see, looking back at where we started in 2015 and where we're at today, that a lot of that risk has been mitigated. Of course, there is no guaranteed return, and a few of the industry risks associated with the project include area structure plan timing. So one of the things they have announced is they expect a final area structure plan in the fall of 2020. Of course, that can't be guaranteed, but we are encouraged by the public announcement of their expectations. Economic and political climate remains a risk. And one of the things I would like to touch on from the issuer risk perspective is we do include in there the ability to remove trustees or the general partner as a risk of the investment. And why that's a risk is because of the significant investment of management and directors in the project. So over $8 million invested by management and directors, and that's really why that risk of ability to remove them exists. That being said, we do have a governance model in place, and this is really the governance structure that holds management's feet to the fire. So though there may be that limited ability to remove them from the investor standpoint, it's really this board of trustees and board of directors that do hold management's feet to the fire and hold them accountable to do what we say we're going to do. So a few of the names on the screen there as far as board of trustees. Joe Lougheed is managing partner at Denton's. similar to Don Leach. So both act as trustees of the fund. And then a few of our board of directors, Steve Allen and Gary Bentham, both act as independent review committee members and independent directors of the fund, both with extensive backgrounds. Steve Allen, FCPA, and Gary Bentham, a CPA. Both of them hold their Institute of Corporate Directors designation, and great individuals who really ensure that T's are crossed, I's are dotted, and they're really responsible for reviewing and ensuring that the best interests of investors are taken into consideration. And of course, Sean Morgan and Dave Laycock as well encourage you to review their bios in the offering memorandum. In this time, of course, we need to address the impacts that COVID may have had on the project, and we are happy to report that it really hasn't had significant impact of the fund at this stage. Of course, we don't have a crystal ball, can't see into the future in terms of the long-term implications of COVID. That being said, we do anticipate a potential benefit from the inflationary market. No anticipated impact over the short term, and happy to report that operationally, things still have been moving forward and still intact. The one area where we have found a bit of a slower start once COVID hit was in terms of not being able to have the in-person meetings. That did take a little bit longer to rectify in terms of meetings with council and so on and so forth. That being said, these things are moving forward from an operational standpoint. I just added in a quote there from one of our independent review committee members, Steve Allen. If you are an advisor on the call today, you should have received our most recent quarterly newsletter. And within that quarterly newsletter, there was just a note from Steve Allen just talking about the prime location of the Bow lands for Calgarians and tourists, and talking about the COVID implications. Just the last part there, I'll read, important not to overlook some of the promising initiatives being put into place. To see this support from the government in economic growth and development makes us confident in the future of this project. So we thought that's significant just to share from Steve Allen. Not only is he an independent director of Bow Water and Land, but he's also the former chair of Calgary Economic Development. So a great person to have in our corner and to have in our conversations when we look at future development potential of this land. Davin, before we hop into the summary, anything else that you'd like to add?
Not really. COVID really is a non-issue for real estate development projects. In fact, while the county's offices slowed down for a few weeks, our team didn't miss a beat. And since then, actually, access to counselors has been easier because everybody just picks up the phone now, and ironically, we find it easier to initiate those conversations. So, yeah, we're full steam ahead.
Perfect. So just recapping how this all boils down to benefits or potential benefits for investors is, as we mentioned, that total target return of 15 to 20%. It is a project with that significant risk mitigation based on progress to date. So we're looking at water, that water transfer actually having taken place. We own the water, big risk mitigated in that sense. As far as area structure plan and road access, those things continue to move forward as well. And then, of course, participation with experienced and aligned management team. We have Davin leading the charge here as the project lead on the Bow Water and Land project, and additional alignment and experience that really backs the project team and the broader Durum Capital team as well. So just to recap, 298 acres of land just west of the city of Calgary, 7.7 times more water than required with opportunity to benefit from that excess water, and a 10% return plus that 55% profit split. So Adam, that's really all that we have, but open to any questions that may have come in.
Sorry, that'll work better if I unmute myself. Sorry about that. Yeah, Shane and I actually had a couple questions that we were prepared with, and you answered them. So You ruined it for us, you guys. You did too good a job. No, that was great. I think for a lot of people, this is, as I said at the start, this is kind of a tricky deal to wrap your head around. Just because understanding water rights is just such a foreign concept, I think, to so many of us, me included, right? Like before we learned about this deal, it had never really occurred to me that water rights and a land investment could go hand in hand. But it really is a very unique investment strategy, and frankly, I mean the collection of experts that you have, Davin obviously being right on the forefront of that, to have people that understand the water rights, but also understand how to take a project like a land project and get it ready for development, which is, in itself, an entirely different animal. It just represents a very, very interesting opportunity. I think one of the other questions is, obviously Alberta is it's seen better days. Alberta is a challenging place to do business these days, and Calgary, maybe, outside of maybe Fort McMurray, there's probably not a place in Alberta that's been hit with some economic struggles like Calgary has. But the work that you've done, and with this water right, it really does mitigate a lot of those risks, doesn't it?
It does, and Alberta has a lot of things going for it. Low taxes, which are being made lower by the current government, spending per capita that exceeds every other province in the country, consumer spending per capita, and Calgary continues to grow, irrespective of the oil and gas woes. So I think this project benefits from pent up demand. And the other thing that I think is important to consider when we talk about Bow Water and Land being a Calgary project is it's in between Calgary and then the mountain parks, Banff, Canmore, Lake Louise, which are kind of a hedge on Calgary, because every time the dollar gets lower, tourism grows, and so there's a whole other market that we tap into. Canmore and Banff and the mountain parks restrict the floor area of commercial buildings. So, there's a Canadian Tire in Canmore, and it's one of the smallest ones in the country, and that's the biggest footprint that you're allowed in Canmore. So you'll never see any big box, Costco doesn't want to go, that sort of thing, in Canmore. And this is the closest possible spot to the mountain parks corridor, because just east of, as you exit the mountains, there's the Stony Reserve, and then you're in essentially to Springbank. So it's a really interesting corridor from a development perspective.
And I will just add on to that, just a note on traffic. Again, if there's anybody local on the call today and you've taken a trip out to the mountains recently, I'm not sure if you sat in the 2 hours of traffic right outside our lands trying to get back into the city on a Sunday, but I sure have. So it would be nice. I think about it every time I'm driving past there. Think about, well, what if I could just pull off somewhere and have dinner and wait for this traffic to go away? And I think that's a key piece that we think about the city. We hear the headlines, we see oil and gas headline after oil and gas headline, but there's a whole nother market and a whole nother experience that this corridor really taps into, irrespective of oil and gas.
Yeah, for sure. Normally on a land deal, the exit it's a pretty easy thing to, I mean, the exits are always tricky on land deals, but like normally they're not all that complicated in terms of what an exit looks like, right? Like typically you either sell it or develop it, or that's it. You guys, obviously with the water, there's more complexities, and with that comes more opportunities to be creative on an exit. Can you talk about the varying ways, or the various ways that you feel you can get clients out of this deal?
Sure. I can talk a bit about that, and then maybe Amy will fill in any gaps. Ultimately, our OM, as indicated in the OM, we are interested in a fairly conventional sales process. We want to get the land entitled so that a developer can walk in and not have the risk of certainty of land use or access to water and wastewater utilities. So that's what we talk about as shovel ready. And it could be a relatively simple sales process. And of course, we've already initiated conversations and begun building relationships with potential purchasers or developers. The water adds a dynamic. There's multiple ways to exit with the water. One, it could be a very simple conventional sales process where we resell the sort of leftover water if and when we determine that it's effectively left over. Two is the kind of things we've already entered into, which are trading those rights for other benefits or interests. One with the River's Edge is actually has provided, rather than having to buy another piece of land down on the river where we have to build the wells to bring the water up to the site, we've entered into a trade. So we can sprinkle it around in the corridor in ways like that. So it really could be a conventional exit. It could also be more complicated. We've talked about the potential of creating a public utility and maybe rolling out another investment option in that, which would create potentially another sort of partial exit opportunity. You could exit on the water, which would be rolled into the utility, or exchange units for units in a utility or something like that. So those are the kind of options. We know investors like exit opportunities, and we're constantly thinking about the best way to get there reasonably quickly, but to maximize the returns and the options.
Right. With this, the challenges that Alberta is having right now, I mean, I recognize that in something like this, you are going to have certain things that you can control and really drive and influence, and other things that are kind of out of your control. Can you talk about the things that are out of your control and how potentially meaningful those things can be to this project, good or bad?
Well, I mean, the primary thing that's out of our control is just the willingness of a potential purchaser or developer to come and take us out. We don't, as Amy said, we don't have a crystal ball, and that's what we wonder, how's COVID going to affect the market? But even if we exited today, even if we sold our interest today, the development process takes time. So there's this speculation of that buyer, no matter when they come in on the market, 5 years from now or 4 years from now. And development does tend to be a gradual thing. Maybe you put in an anchor and the anchor draws traffic, and then the other development comes around. Now, again, that's not our process, but it talks about sort of the time frame for development. So to some extent, risk is mitigated by spreading it over a longer horizon. But again, what that market looks like, when and where all that happens, and how people look at that market right now is outside of our control. Knowing that we are in this busy corridor where there's pent up demand. I mean, the other thing we've talked about in previous webinars is Calgary has grown quickly, and it's grown long north and south, but it hasn't grown further west. And you'd think it would, right? You'd think, well, that's the most beautiful views and the best land. But what happened is, over the history of development of early Calgary, you got a lot of sort of 2-acre parcels, what we call country residential lots, that have sprinkled all down that sort of western side of Calgary. And what it's done is block development from happening incrementally through annexations, which Calgary's been able to do north-south. So you end up with this sort of pent-up demand and a lack of services on this side. So so that, combined with the sort of two markets of Calgary and the mountain parks, I think mitigates a lot of the risk of what the market could be in future.
And how many, so in that area that you're in, because I think you guys did a really nice job of just illustrating why that area is desirable. And certainly anybody who's spent any time in Calgary would agree with you. Like, anybody who knows that city would know that this area is a very, very desirable area for all the reasons you outlined earlier. How many other developments in the area are currently selling lots and like are underway in development, and how far along are they in that process?
Well, there's a lot of residential. Of course, Harmony is building and selling as quick as they can. I don't know. I think they have like 700 or 1,000 sold lots, and I don't think it's 400 or so houses built, and that's all happened in the last couple of years. You know, others closer, we've got Perdera approved, not in the ground yet, but working on servicing. Similar River's Edge. There's also a dozen or more existing country residential developments that were built with provisional services in this corridor, but they were obligated to put in conventional servicing service mains. So they're kind of sitting there waiting to connect into a more regional system. On the commercial side, there's a little less just east of us, sort of across the road, across 33 from Callaway Park on the map that's up on your screen right now. There is, it's more of an industrial area. Woody's RV World and some other stuff like that used to be there, but it's really changed, and there's a lot more consumer-focused businesses now. You know, and you know, lumber yard, and there's a church, and some food and beverage type stuff coming up. So that's been a relatively successful. It's certainly not the kind of development that we are targeting. We think there's an appetite for much more high-end, integrated, destination-oriented commercial, but it does show that there's a demand for that. I mean, it started as sort of light industrial, and it's gradually being taken over by commercial. So if you could do that in a more curated fashion, I think you see a whole lot more activity. Bingham Crossing's also up there, and I understand they now have an anchor. And I mean, we keep being told they're going to be in the ground any month. It's been a bit of a slower process for them than we expected. They're a private developer in there, and they've got very deep pockets and seem to be in no hurry. But we think that'll be happening sort of concurrently with some of our development.
That's great. There's no more questions coming in, and I'll maybe give just a minute for a couple to come in. Maybe while we're doing that, just any other kind of closing thoughts on actually, here's a really good question. Why now? Why should someone pull the trigger on this investment now, right? There's a premium right now that people are placing on liquidity right now. People are trying to keep powder dry. Why now? Why should they pull the trigger today on an investment in Bowater and land?
Well, if I were to answer that question, I'd say, you know, we've tried to, we were matching the unit price sort of to the passage of time, because it makes sense to incent people to get in early and go and get in when the risks are higher. And I guess for a variety of reasons, partly because of this change in the market, we've kept that unit price frozen for a lot longer than we ever planned or expected to. So I feel like it's sort of a bit of a discount right now. I thought we were going to, management and the board would bump it immediately after the water transfer, and I think they would have had we seen a little more of a flood of subscriptions like we expected, or you know, COVID hadn't hit and slowed things down from an investment perspective. So yeah, I mean, I feel like it's to some extent on sale right now because there's a lot less risk than there was a couple of years ago, and the unit price hasn't gone up much. Or sorry, yeah. The purchase price hasn't gone up much. I feel like the value's gone up quite a lot, but the unit price has been steady.
Yeah, and to echo that, to Davin's point, we were expecting to increase the unit price in April. It was board approved to increase that unit price up to $16 per unit. However, looking at the market, we decided to not increase that unit price at that time. So under our existing offering memorandum, there is potential in come September for that unit price to increase.
The other thing I'd say is, you know, as we move toward, you know, like we have initiated this exits, and you know, it's a bit of a fishing expedition, as anyone knows, in a land sales process or development process. And you know, there's a, you know, as you get later in the process, it's a bit of a gamble. You know, if you don't invest now, it may be that, you know, we're off the market in 6 months or a year or whatever. So as you know, as you get further into the process, the window for taking that opportunity is shorter.
Yeah, for sure. I think that makes sense. Okay, well, I think there's no other questions to address here, at least none that have come in. If any come in, we can certainly forward them on to you and have them addressed that way. But Davin and Amy, thank you both for spending some of your time. I know, Davin, you took some time off from vacation to be here with us today. And I think most of the people on the line are a little bit jealous of wherever you are. You look like you're in a pretty awesome spot there. So we'll let you get back to your vacation. And Amy, great job as usual. You two, you just do such a wonderful job of telling the story, and you know, client service second to none. So thanks again, and for all of those who chose to invest an hour of your time with us to learn about this today. We're grateful for that. Please talk to your advisor with any questions or comments or interest in this or any of our other offerings. So thanks, everybody. Have a great and safe rest of your day. Take care.
Thanks, Adam.
Thank you, Amy. Take care.